Hello and welcome to RentalBox, a HMRC approved software for making tax digital. In today's video, we're going to be breaking down the key differences between making tax digital for income tax and the self-assessment tax return. If you're a taxpayer, small business owner, or an accountant in the UK, this is crucial information to help you navigate the UK's evolving tax system. First up, making tax digital for income tax self-assessment, hereafter referred to in this video as MTD, is a part of wider government initiative to digitize the tax system, which aims to simplify and streamline how individuals and businesses report their income and expenses to HMRC. MTD will roll out from April 2026 and will gradually affect more and more taxpayers. Under MTD, certain self-employed individuals and landlords who cross the relevant income threshold will need to report their income more frequently using digital tools to send updates directly to HMRC. This means that no more waiting until the end of tax year to submit your tax information. Instead, you'll report your income and expenses quarterly using a HMRC approved software. On the other hand, self-assessment is the current system that most self-employed people, freelancers, and those with income sources outside of the payee, like rental income or dividends, use. Self-assessment tax return requires you to submit an annual tax return to HMRC, reporting your income, expenses, and tax liability. Now, let's get into the key differences between MTD and self-assessment tax return. With self-assessment, you only file your tax return once a year, typically by January 31st following the end of the tax year. However, with MTD, you're required to submit quarterly updates to HMRC. Another difference is the software requirement. Under MTD, you must use HMRC approved digital software to file your quarterly updates, whereas with self-assessment, you can still use the paper form or HMRC's online portal. Under MTD, you need to keep digital records of your income expenses, which means that no more manual ledgers or spreadsheets. Self-assessment, on the other hand, still allows you to keep physical records, though using software is still recommended for accuracy. Ultimately, MTD is about digitizing the process and making reporting more frequent and consistent, while self-assessment is still rooted in a more traditional system. Over time, we'll see more of the UK tax system move towards MTD, and it's important to be prepared for these changes. If you're unsure about which system you should be using or how the transition to MTD will affect you, make sure to speak with a tax professional or check out our other videos where we break down tax topics in more detail. Don't forget to like, subscribe, and hit the bell icon for more updates on tax tips. Thanks for watching, and I'll see you in the next video.